Bismillahirrahmanirrahim. This is the final account question called CLARION. This question is part of your Kaplan kit as well. Now the thing is, always remember, first of all, we have to read the question carefully, including the trial balance. Trial balance, reading of trial balance is very, 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 very important. So we already did that. We already read the trial balance and the notes. After reading the notes, I used to ask students that, guys, please tell me, note 1 is a loan note, right? It's an interest and something like that. Okay, fine. Note 2, property, plant, and equipment, IS 1616. Am I right?
Yeah.
Note 3, note 3, note 3. What is note 3? Note 3 is which IFRS?
16.
IFRS 16, yeah? Leases, correct?
Yeah.
Then
Mm-hmm.
note 4, investment at fair value. Okay, fine. Fair value adjustment is there. No problem. And note number 5 is always, usually, is last note is always pertains to IS 12. IS 16 and IS 12 is an integral feature of your final account, because each and every company in this world do have non-current assets, and in the end the companies are paying tax. So IS 16 and IS 12 are the key. They will be part of all the questions of final account. Got me or no?
Yeah.
Now, not how to deal the question in the paper, how we are going to deal with it. The requirement is to prepare SFP assets, then equity, then liability is the SFP. Preparation of SFP is not a big thing. Preparation of SFP is not a big thing at all, but solving the notes, what I said, solving the notes is the key to success. Solving all the notes is the key to success. So how to do that? First of all, I used to say, students, guys, please solve each and every note first. What to do first? Solve each and every note first, and then prepare the SFP. Got me or no?
Mm-hmm.
Now, how to do that? How to solve the notes? This we will do now. So the first note is about 8% loan note. Am I clear? Where it is? 8% loan note. Oh. Where is note 1? Okay, note 1. Suspense account is there, something like that. Note 1, note 1, note note 1. Okay. So I found two items which is referring note 1. Am I clear?
There's one more.
Where?
Above suspense account. Loan note interest
Yeah,
paid.
interest. Okay. So very nice. We found the letter, three items which pertains to note number 1. Correct?
Mm-hmm.
Now, how to solve it? They said my year end. Always remember, year end is very critical. Year end is March 2005. Okay. They are saying on 31st March 2015, 1/4 of the 8% loan note were redeemed at a par, and 6 months outstanding loan interest was paid. The suspense account represents the double entry corresponding to the cash payment of the capital redemption and the outstanding interest. Okay, okay, fine, fair enough, no problem, no problem at all. First of all, tell me one thing. Tell me one thing. What they are doing, what they did today, what they did.
Redeem the 8% of the loan notes at
How,
par and
how much? How many? Whole of it or some of it?
1/4.
1/4 is how much? Repaid, right?
Yeah.
5, no, how much it will be? 1/4 of it?
1 to 50, I think. Oh,
Huh?
my calculator.
Check.
1 to 50.
No, not 1 to 50.
1 to 50.
The loan note is actually how much? It's 20,000. Yeah. So 5,000 is
Ah,
right.
yeah.
Now you repaid the loan. Repaid the loan, which means you have the double entry of bank and the payable. The loan note needs to be debited and the bank needs to be credited. That is the correct entry. Am I right or wrong?
Yeah.
Correct entry. But they wrote there is a suspense account represent the debit entry to the cash payment. Yani what they did, they missed the entry of loan note. They missed the corresponding debit entry of the payment, right? Bank, they already reported on the credit side. They missed the debit entry. So if they missed any entry, normal accounting is if you miss anything, there is who. If you miss something, there is a suspense, right or wrong?
Mm-hmm.
And the correction is to kill the suspense. This is our normal rule. Kill the suspense account. If you have suspense account, you have to kill. You have to remove the suspense account. Suspense account opens up where there is no entry at all. If you missed any entry, there is suspense. And in order to correct the entry, in order to make a correction, suspense has to go out. Suspense gone. Khalli walli. And what is supposed to be is supposed to be the loan note, right? So the loan note debit, suspense credit. Am I right or wrong?
Mm-hmm.
Now, the suspense opened up in this question is not only with 5,000. The suspense here is with how much amount?
5,800.
800. So out of the 5,000, any suspense was, we do have suspense for 5,800, right?
Yeah.
Loan note correction removed 5,000 from it, right or wrong?
Yeah.
Remaining is how much? 800,
Mm-hmm.
right? This 800 is for what? Read it.
Cash payment for the capital redemption and the outstanding interest.
How much is the interest?
800.
800. How you got 800?
The interest paid loan note.
Hmm. Interest paid. This is the paid amount. Look, I will calculate for you. Loan interest, right?
Mm-hmm.
How much is the loan? 20,000.
20,000.
Rate is 8%.
Mm-hmm.
How much is coming?
1,600.
This is expense for the year or no?
Yeah.
Now be careful, huh? Out of this 1,600, in the trial balance, it is how much reported already recorded?
800.
This 800 is already recorded, na? So
Mm.
the meaning which is unrecorded, and they said that outstanding interest is found in the suspense account. So that's why it is 800, right or wrong? How this 800 comes from? It is the balancing figure of the loan interest. Look, the actual interest is 1600. In the
Mm-hmm.
trial balance, you paid 800 already. So out of 1600, 800 is reported as a paid amount. So the remaining is unpaid or no? Which they are saying is part of the suspense account and you paid it. Khalas. So this suspense account, the remaining 800 is from here. Am I right or wrong?
Yeah.
And this is the paid interest which was not reported. That's why it is found in the suspense. And now we comes to know that 5,000 in the suspense account is because of the loan itself, and 800 in the suspense account is because of the interest. Got it or no?
Yeah.
The total interest was 1600. 800 we found here. So the remaining 800 is missing. And the missing amount always we will treat from where? From Uncle Suspense, right or wrong.
Mm-hmm.
Now when we will make SFP, now what I will do, when I am going to make the SFP, remember that I have to reduce my loan note with 5,000, correct or wrong?
Yeah.
Now the loan note here is 20,000. But after
Mm-hmm.
adjustment of the 5,000 loan note, which they missed to record, which was in suspense, now I will record the 5,000. Loan note is a liability. I will put a liability on debit, means liability will decrease. Yani in my final SFP, which we will produce today, inshallah, we will put the loan note with a figure of 15,000, right? Instead of 20, which was showing in the trial balance, right or wrong?
Yeah.
So note 1 finish. Now I will move forward. Note number 2. The name of the note is PPE, property, plant and equipment. Be careful. Included in property, plant and equipment. So included means we do have some property, plant and equipment in the trial balance. Okay, this one. Accumulated depreciation is this one. Any other
Mm-hmm.
thing? Note 2, note 2, note 2, note 2, note 2, note 2. Oh, here it is. And oh, not 4. Alas. Only 3 items in the trial balance regarding the note 2. Am I right?
Yeah.
This one, and that one. Correct?
Mm-hmm.
Now, be careful, huh? Now, they are saying included in property, plant and equipment is an item of plant which costs 14 million, purchase on first, purchase on first, purchase on 1st April 2004. We are having the year end 2005, any start of
Mm-hmm.
the year.
Mm-hmm.
However, the plant will cause environmental damage, which will have to be rectified when it is dismantled at the end of 5 years of life, right? The present
Mm-hmm.
value of this rectification is 4 million. The environmental provision has correctly accounted for. However, what they missed? Finance cost. Remember, this finance cost is known as unwinding of discount. Remember?
Yeah.
So they did each and everything correct. They record the provision right, but they forgot the unwinding. So we are here. We will do unwinding for them, no problem. And still the depreciation is not yet charged, and it should be charged to cost of sale, state line basis, 5 years of life. No plant is older than 4 years. It's okay, no problem. Now, the first thing, two things we need to solve here. Am I right? The first
Mm-hmm.
one is to calculate the net book value of property, plant, and equipment. Why? Because it's going to be part of your SFP. Am I right or wrong?
Yeah.
Now, the problem is we have too many things. First, there is a plant which is costing 14 million. Is it already part of your asset side or no? Is it already part of your asset or no?
No.
Included in, they already wrote included.
Ah, okay.
Okay, included means it's already part of my plant and equipment, right?
Yeah.
Now there is a issue. There is a issue. What I need to compute things here. What I need to compute the things here. First of all, they are saying that 14 million is the cost and the environmental damage which is to be rectified, any rectification after 5 years, the present value is how much? What is the present value? 4 million. They recorded it
Mhm.
correctly, but they didn't provide what they didn't provide. They forgot some,
Finance cost.
huh?
The finance cost.
Finance cost. You remember the finance cost of this type of thing is going to be part of the environmental provision of the liability or no dismantling cost, something like that.
Mm-hmm.
They give it the name environmental provision, which is known as which is known as uh what we used to say dismantling cost, right?
Yeah.
So we have dismantling cost. Now dismantling cost was how much? Okay. Dismantling cost, we are aware of, is a non-current liability, and unwinding, which they are saying that they missed it. Unwinding of discount is known as the finance cost. So the finance cost unwinding is going to be calculated. We knows the formula. We used to take the present value multiply by the percentage. So the percentage is given 8%. Present value, present value, present value. The present value is 4 million, three zeros rounded. So 4,000 into 4 eights, I guess it's 32, 320.
320.
And in the SFP, we will have a non-current liability of dismantling costs or whatever you're going to go give it the name, like environment provision or any name, is going to be 5320. Am I right or am I wrong?
Yeah.
So one thing from this note is being done. Second thing is to compute the depreciation. Second thing is to going to be compute the depreciation.
Depreciation.
Okay. Now there is a issue. Depreciation kidhar? Where is the depreciation? We have the 77,000 is the cost, right?
Mm-hmm.
And rate of depreciation is
Straight line method.
how many years? 5 years or four? What is the formula? 5 years, correct?
Yeah.
So how to compute it? Depreciation on plant and equipment 77,000 at the rate
Right
of
with that.
divided by 5.
15,400.
So this 15,400 is the depreciation, right? This is
Mm-hmm.
separate thing, that is separate thing. But in the SFP, when we will take non-current assets, property, plant, and equipment, right? It's gonna be 77,000. How much is the accumulated depreciation? Previous accumulated depreciation of this asset is 19 or no?
19. Yeah.
So 19,000. It is the accumulated depreciation for the previous year. 15,400 is the depreciation for the year. So the carrying amount supposed to be CA, yani carrying amount supposed to be how much? Which is going to be
42,
42.
42,600.
This amount, when we will compute our SFP, when we will merge the things, we take this figure. The green color items are very important, which are going to be taken care of while making or structuring the SFP at the end of this question. Okay.
Mm-hmm.
Now, right to use. Right to use is the lease, right?
Yeah.
I'm trying to get the question down so we can easily read it. We can easily use the data because this question is a big. 1, and always you will find the same length or more lengthy questions of final accounts. Okay, but if you are your grip on IAS are strong, this is a easy topic. But if you don't have grip on IAS, halas, this is very difficult. Now, leases, leases, right? IFRS 16. You know two items. One is right to use asset, which is gonna be the non-current asset, right?
Mm-hmm.
And second thing is the lease liability, correct?
Yeah.
Which we use to apportion in between current liability and non-current liability, right or wrong?
Yeah.
In this question, only SFP is required, so finance cost I don't need, but it will come, it will appear. But my focus is SFP, so I will focus on assets and liability side, not the income and expense side, right?
Yeah.
So when we were discussing IFRS 16, we learned the formula how to how to calculate the right to use side and how to calculate the lease liability side. So can you take 5 minutes and try to get the answer for me for this note? Absolutely correct. But how you got it? Asset value is how much? Tell me.
Um,
The let me
5,700.
1st April 2004, yani start of the year, acquired the asset at 5-year lease. Initial deposit 2.3 million, annual payment is 1.5 million each year. Present value of annual payment, excluding the deposit, is 5.7 million, right?
Mm-hmm.
And implicit rate of interest 10%. Right of use asset is already recorded, they already correctly capitalized. You need to compute the liability. So right to use asset is already there, they are saying is correct, so we will not play around. It is 8,000, so halas, it is 8,000, it is correctly recorded, so we will not say anything, right?
Mm-hmm.
But this is right to use asset on which date? 1st April X4, right? What about depreciation expense for the year? We need to compute the expense for the year or no? Because we will make the
Yeah.
SPP at the end of the year, no? Full year. Full
Yeah.
year depreciation need to be computed. How much will be? How is going to be?
5 year. Divide by 5.
So 5 or 4. The policy of the company is
4. 4.
company's policy. All the assets do have life of up to 4 years. They mentioned here on the above note. And we
Mm-hmm.
know that here we used to take the lower of the
Yeah.
life, which is 4, and the lease term which is 5. 4 is given in the above note, note number 2. They said it
Yeah.
that all the assets, no plant is more than 4 years of life, and this is also a plant, so this is for all the plants they are mentioning. So divided by 4, how much?
2,000.
3,000. Answer is
6,000.
6,000 is what?
Carrying amount.
Okay, any problem?
No.
Okay. Here, some students can do one thing. This is that, sir, that is note number 2, where they talk about the life of a plant. But the policy of company is to depreciate on the 5 years of life. So why you are taking it for? You can use like this: 5 years of life as per policy mentioned, and divided by these term is also 5. So I used to tell them that if you do like this, you must write this line that we are taking it 5 because of the policy. So the examiner will not say anything to you. If up to you that you will choose the 4 as a life of all the plants, including that one, you will mention that I am assuming this. But if you are doing this, that sir, the policy of a company is to depreciate for the 5 years. You mention this that I am using it as per policy 5 years of life, and the lease term is also 5 years. So I will calculate the depreciation on the 5 years. Got me or no?
Mm-hmm.
So the answer is will be little bit different.
Yeah. 1,600.
Okay, 1,600, fine. So the carrying amount, which is going to be reported in SFP, how much?
6,400.
This is what we need, right? When we will make the SFP, we will take the 6,400. And the non-current liability, current liability is required. We know how to deal with it. The BD, then the finance cost, then the rental, the payments, remember? And
Mm-hmm.
the lease is started 1st April 2004. So the first year end is my year end, which is
Yeah. 31
March.
March 2015.
And,
Yeah.
and we know that we have to prepare this table for the 2 years, right or
Mm-hmm.
wrong? The initial liability, which I supposed to write in this table, is going to be
5,700.
why? Because they already mentioned, right? The present
Yeah.
value.
Mm-hmm.
The payment is already deducted. We will take always the present value. 5,700. Interest rate implicit is how much?
10%.
10%. Okay. So it's 570. The
Mm-hmm.
rent payment per month is per year is how much?
1,500.
Mentioned here. So this add, this deduct. Answer.
4,770.
But we need this. This is the liability, right? This is called the liability. But we
Yeah.
knows that we have to split between current and non-current. So we have to do 1 year more working, right or wrong?
Yeah.
Remember?
Mm-hmm.
So 4770. Again, an interest of 10%, which is 470. Rental is fixed. So the answer is
3,747.
3747. This answer, which I wrote in the purple with the box, is a non-current liability. The
Mm-hmm.
total liability is 4770, out of which the non-current liability is 3747, right?
Yeah.
So the current liability gonna be
1023.
1023, and this is the SOCI expense, which is known as the finance cost, right or wrong?
Yeah.
So that is my answer. That is my answer. And this one is the income statement answer. Okay.
Mm-hmm.
Any questions?
No.
Okay. Now the next note, which is about the investments. Investment, investment, investment. Where are you, investment? Note number 4. Search. Investment.
Last one. Last line. Yeah, this one.
One. Another is this one, right? They already recorded the investment at the start of the year. The date is very important for 6,000, and they report the income of 500. Start of the year, it is how much? 6,000, and the income is 500, right?
Yeah.
Now reading the note. The investment through profit and loss are those held after the sale below. They are carried at the fair value at start of the year. Okay, no problem. They had the market value of 6.5 at the end of the year. During the year, an investment which has a carrying amount of this was sold for that much. Investment income in the trial balance above includes the profit on the sale of the investment and dividend received during the year. No problem at all. First of all, we have to solve it, right? One by one. Okay.
Mm-hmm.
They gave you the dividend income and profit on sale of investment. How much? Which is showing in the trial balance, right? Kidhar hai, where it is? Is it 500 or no?
Yeah.
Okay. So this is the 500 gain. Okay, no problem. Any other? Any other thing?
Mm. Dividends
This is
received during. Ah,
div-
okay, it's together.
is together, na? Any other? They said investment at year end, 31st of March, valued how much?
6.5 million.
Okay, very nice. So the value at the end of the year is going to be a non-current asset because this is the value of my investment, right or wrong?
Mm-hmm.
This is okay. My investment income is how much? My investment income as an asset to be reported in SFP is how much? Is it 6,500 or no?
Yeah.
Okay. Problem is, this is a fair value model of investment, right? Which model?
Fair value.
Fair value model. So this is the income, okay, fine. Gain on fair value adjustment because of gain or loss, anything can happen. We need to find out. And this is the adjustment of SOCI income, right or wrong?
Mm-hmm.
Now I need to find out the gain in this investment. Is the gain is given or we have to find it out? Be careful. The investment showing here is how much? 6,000 at the start
Mm-hmm.
of the year, correct?
Yeah.
Okay. It was 6,000, Miss Komal, investment, na? Invest,
Yeah.
BD. And the market value of the investment became 6,500, right or wrong?
Yeah.
It was 6, it became 6,500. So, wallahi, there's a gain or no?
Yeah.
So, gain, gain is going to be added in the profit on disposal. Correct me if I am wrong.
Yeah.
Here, some students used to ask, Sir, why you are not adjusting? What is the question? Be careful. Sir, why you are not adjusting the disposal from this 6,000? Why you are not deduct? They sold, sir, some investment. Why you are not adjusting the selling, the carrying amount of the disposed of investment from the opening value of 6,000? So the answer is why I didn't adjust that? Because I read the question properly. They wrote here that the investment showing at the year end is after taking the impact of the disposal. So this is after disposal value. Yani the disposal of this blue color is already taken care by the examiner. That's why I took 6,000. Be relaxed. I took 6,000, compared it with the value at end of the year, and I found the gain, which is going to be part of my income statement, and the value at year end is going to be my non-current asset, which is going to be reported in SFP. Got me or no?
Yeah.
Any questions?
No.
Wow, mashallah. Now the last note, usually 90% cases, the lower last note is going to be the taxation. Let's see the trial balance. Where is tax? Uncle tax, uncle tax, where are you? Note 5, note 5, note 5, note 5, kidhar hai? How many times tax is given? Is there any tax given?
Uh, Deferred tax.
Deferred tax, okay. Current year tax is not mentioned in this question. So it's easy. 2,700 is the deferred tax given in the trial balance. Remember that, huh? How much? 2,700 in the trial balance. Let me write it somewhere so we will not make a mistake. Deferred tax. Okay. Which side it is? Debit or credit? Which side? Debit, credit.
Credit. Credit.
So credit means is it deferred tax asset or deferred tax liability?
Liability.
BD, no? Okay.
Mhm.
We will compare with the CD to find out the increase, right or wrong?
Yeah.
Okay, let's see what they are saying. They are saying current year tax provision is this much required. Current year estimate, right?
Mhm.
There is no over or under provision given in the trial balance. There is nothing. So current year provision is this and this, right?
Yeah.
So the expense and the liability is the same amount. This is what, this one is what, and that is what. That is the expense and SOCI, and that one is the tax liability, which is the current liability, right or wrong?
Yeah.
When we will make the SFP, we will come and we will take this number now. And this is the expense for the year. Defer tax. They are saying at the year end, the tax base of net asset was less than the carrying amount. Oh, Allah. Defer tax. What they are saying, tax base is lower than carrying amount by how much? 12 million. If the tax base is low, means carrying amount is high. Carrying amount is higher. Madam, ma'am, miss, carrying amount is higher. If carrying amount is higher and the tax base is lower, it's going to be, it's going to result in temporary difference. Which temporary difference is that? Taxable or deductible? Whenever
Uh,
carrying amount is high,
Tax.
it's a tax,
Taxable.
and we will multiply with the tax rate. The DTL, the DTL CD balance is how much?
3,000.
DTL CD balance, DTL, DTL CD 3000, which is going to be part of my SFP as a non-current liability. And for the sake of completion of the question, we are aware of that the difference between VD and CD is going to be tax charge or deferred tax expense, right or wrong?
Mhm.
How much is coming?
300.
Because the CD is higher, BD is lower, liability is increasing. If liability increases, madam, the thing is the expense increases. Am I right or am I right?
Yeah.
Alhamdulillah, we are done with all the notes. Okay. Now we have to produce the SFP. Any confusion? Any questions?
No.
Sure. You
Yeah,
must
till
you must do this question on spreadsheet by before the next class. Must, huh? Must.
yeah,
Otherwise,
if you'll send me the recording, right?
definitely, yes. But you must do this question on a spreadsheet. Okay. This is a first question. That's why I'm not using a spreadsheet. Next
Mm-hmm.
question will be in flow. I will use the spreadsheet for one or two questions, inshallah. So you will see it. But doing this at home must be on a spreadsheet, not on register, not on copy. Okay.
Yeah.
Now, this question is about to finish because now I am going to combine all the drama in SFP. Okay. SFP, very easy. You know, from the childhood, we are doing SFP. Assets, first thing is non-current assets, right?
Yeah.
Have property, plant, and equipment for which we did already working, too much working we did. Going up, 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 up. Where? Up. Kidhar. Where? Allahu Akbar. How much? Non-current assets. Did we got the non-current asset or no?
Yeah.
How much?
42,600.
So I am taking this data. I just highlight with the blue color what I will take. So we will not mix again. Okay. So we just took this one. Marhaba. 42,600. 42,600. The second one is non-current asset, right to use asset, right?
Mm-hmm.
So what we are taking, just I am highlighting, so we will not miss a single number. Okay. So this accumulated is also considered. Right to use asset, where are you? Where are you? Right to use asset, where are you? Oh, here it is. How much? 6,000.
400.
Okay. Writing these numbers are giving you marks now. There is no any other non-current asset in this question. Only two non-current assets, but wait a moment. Most of the students are forgetting to take the investment. Investment is a non-current asset, bhai. Investment, you are investing somewhere. It's your asset, bhai. Don't forget. And we already found out the value, the closing value, the CD value of the investment, which we already wrote here, which is going to be part of SFP. How much it is?
6,500.
Okay. With this, I don't left with any other non-current asset. If you want, you can make a total of the total non-current assets. How much? I think this is 55. Check.
55,500.
Okay.
I got 500.
Yeah, you are right.
4, 5.
Then current assets. Remember one thing, the sequence of current asset is very important. Closing inventory will be at top, then
Mm-hmm.
current receivables, then bank, and then cash. Okay. Inventory, receivable, bank, cash, and then at last asset held for sale if IFRS 5 is there. Okay.
Okay.
Inventory IS2, there is no note mentioned, no nothing.
Mm-hmm.
So inventory will be same. Trade
Yeah.
receivable, no adjustment of the receivable in the question. So receivable will be taken as it is, free marks. The format is like that, that current asset you will put in a separate column and you add them up to right here. The bank is there. Sir, why you are not taking the bank? Bank is on which side? Debit or credit?
Credit.
So credit is a overdraft, not the assets of Khalli Walli.
Yeah.
And I don't have left with any current or non-current assets. So I am having my total assets. How much?
It's 32,200.
Oh, sorry. I don't have calculator, Aslan.
87. 87,700.
Okay. Now I have the next thing, which is heading, equity, and liabilities, right?
Yeah.
Now, equity and liabilities, $1 share capital. Either A, what they wrote, we will use the same name. We will not be over smart. They wrote it like equity shares of $1 each. So we will write what they wrote. There is no transaction relates to the issuance of shares in this question. So khalas, take it like this. Okay. Is there any share premium? Is there any share premium in this question?
No.
So khalas. We will take retained earning. Retained earning is given at which date?
31st March.
2005, right?
Yeah.
Now, 31st March retained earning is given. They wrote here one paragraph. Can you read this paragraph?
After preparing a draft statement of profit or loss for the year ended 30th September 2014 and adding the year's profit before any adjustments required by notes 1 to 5 below to retained earnings.
Oh,
This.
oof, oof, oof. What is this drama? What this English means here? Sir, they means to say that this is retained earning, which is 33,100, and it's before adjustment of note 1 to 5. So, sir, we need to adjust our retained earning with each and every note. Yes, you are required this. Oh, Allah. So, retained earning will be a big working, but at the end, I will do it. Okay. Let's complete the format first. There is no share premium, no revaluation. So, khalas, the equity will be like this. I don't need to make total now. Non-current liabilities. Do we have any non-current liabilities in this question? Loan note, deferred
Mhm.
tax. Two non-current liabilities I can see here. Environmental provision. Three non-current liabilities I witness here. And lease. Four non-current liabilities are there. Right or wrong? NCL, 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 NCL. So let's start with the first one. Always remember the loan note must be given a priority. So loan note. Loan note given in the question, how much? 20,000. In the note 1, we adjusted 5,000. Remember? Where, sir? Where?
Yeah.
Where, sir? Here, sir. Here, ma'am. You forgot to record the repayment and it was in the suspense. We came here and we removed the suspense and report the loan note. So, Uncle Suspense gone. And this is the correction. Remember or no? Note number 1, right?
Yeah.
This is a lengthy thing. Most of the time, students forgot to take the items, although they try to found them, but they used to forget it. Deferred tax liability. Okay. The CD. Oh. What is the CD of deferred tax liability, ma'am? Deferred tax liability CD is how much? Hello.
Deferred tax liability. 3,000.
You already found it, no? 3,000.
Mm-hmm.
So CD will come here. Environmental provision. They said, what is the SFP is correct? So it is 4,000, right?
Yeah.
But they missed in the question, they missed the unwinding. And we
Yeah.
know from IAS 16 that unwinding of discount is going to be part of the liability. Remember?
Yeah.
And we computed the unwinding. How much it was?
370.
3.
320.
Okay. So 5,000 plus this 5,320. Okay. Then lease. Lease in non-current liability. Lease in non-current liability. How much?
3747.
3747. If you want to make a total, please tell me.
26,067.
After that, current liabilities. Current liabilities, we have trade payable. What are the leftover items? See, bank is there. This one is a loan liability.
Yeah.
Bank Halliwali, suspense is closed. Trade payables 9,400. 9,400. Lease, there is lease now. So definitely there is a portion of the current liability in the lease. How much it is?
1023.
1023. And bank is supposed to be the last. Bank OD. Why I wrote OD? Because it's on which side?
Uh, Credit side.
How much?
1900.
And the current year tax estimate is always a current liability. How much? How much?
3,500.
Okay. Total
15,823.
just for a fun, just for time pass. If I tell you I am not going to do the working of retained earning, and if I won't like to just check this number, what is going to be? We knows that the total assets will be the total of the equity and liability, right or wrong?
Yeah.
Anybody? Okay. Doing some reverse maths, deduct this, deduct this, deduct this. See, what is the non-retained earning? Some math, 87,700 minus 15,823 minus 260,607 minus 35.
Minus 10,810.
If you do like this, you are going to lose marks, okay?
Hmm.
If you will do this, you are going to lose 5.5 marks, because in the marking scheme of ACCA, this is a past paper. They
Hmm.
gave you 5.5 marks for this working only. Out of 15, 5 marks belongs to retain earning 5.5. Okay.
Hmm.
So we will not do this like this jugaad. This jugaad is to know the final answer. That the final answer is supposed to be 10810. But we have to show the working. In the working
Yeah.
we are doing. Note 1 to 5. No? All the expense and incomes we will consider. Look, this is note 1. Note 1. Anything, any expense, anything. In this page, you can witness any expense like anything,
Note 1?
anything in this page. Expense, search for expense.
No, note 1 was the finance cost.
But it was already recorded, no? And they paid it. They paid it. Note 1, how much is the expense for the year?
1,600.
Okay. And note 2, unwinding how much?
320.
Note 2, depreciation how much?
15,400.
So I found 3 items. 1600 is loan interest,
Mm-hmm.
finance cost, 1600, going to reduce the retained earning. Then unwinding 320,
Mm.
unwinding of discount 320. I'm going to reduce finance cost. Now I'm going to reduce my profit. Depreciation 15,400. Going to reduce my profit, which is part of retained earning, right or wrong?
Yeah.
Till here easy? Because we solved each and everything.
Yeah.
Now, the second slide. Is there any other thing? Right to use asset. Oh, sir. Depreciation. Kitna? 1,500.
Mm-hmm.
Finance cost, sir. Finance cost, how much?
570.
1,600 and 570, 1,600, 570. 1,600 is, and 570. 570 is the least finance cost, and this is depreciation expense on right to use asset. Am I right?
Yeah.
Okay. Anything left? Going up? Check. Investment income. Oh. Sir, investment income. How much?
1,000.
Okay. Tax expense, sir. Tax expense, how much?
3,500.
And deferred tax expense?
300.
3 more. Investment income, huh? Investment income. Income supposed to add. Current
Mm-hmm.
year tax and deferred tax charge. Current year tax was how much? 3,500 and
Yeah.
check with the help of your calculator. This,
The depreciation expense is minus, no?
yeah, minus, yes. This.
Yeah. 10,810.
And we are done with the 15 marks SFP, which is our question called CLARION. Always remember, final accounts are nothing but a test of your knowledge of IAS. I used to say that we are giving time to IAS. We are discussing all the IAS in deep detail. Why? Because of this topic. This topic, the problem is the examiner is giving any IAS or IFRS which he likes. Like in this question, you witness what? You witness assessments account, no problem. IAS 16, okay. Fair value adjustment, okay. Then IFRS 16, okay. And IAS 12, okay. So usually 5 to 6 IAS or IFRS are